I don't think it will come down to that low. At the current level, China's GDP per capita is still like 12,000.
I'm referring to the productivity, the contribution from productivity growth to the GDP only.
Yes. So with such low like GDP per capita, I think there's still a lot of room for productivity, right? So think about the generation gap in China, right?
Hello, everyone, and welcome to another episode of the Curious Investor. And I'm your host, Redmond Wong. And today we are very happy to have our special guest, Derek Yang, Senior Investment Strategist of KraneShares. And Derek, welcome to our show.
Thank you for having me today.
Yeah, and I think recently we have been hearing a lot of investors asking, why should we be investing in China this year? And given the rather poor performance we have seen in 2023, I know that you have a quite constructive outlook on China this year. So can you tell us why, and why should investors looking into this market?
Yeah, I think a lot of investors have noticed China's underperformance last year. Well, I think in China over last year, there's a lot of risk factor that's being noticed by a lot of global investors, like geopolitical tensions, regulation risk, and on the macro level, there's like real estate sector and local government does have like a financing issue, leading to some deflation in China compared to rest of the world. There's like inflation. So with all those risk factors together, you have actually Chinese equities valuation is coming to a historically low, right? So China's forward PE is 9 times compared to 20 times more for India and the United States. So coming to this year, a lot of global investors actually think about the Fed probably gonna cut rates, right? So providing liquidity globally. So they think Chinese government probably gonna do the same with more monetary easing. So with some money on the hand, you probably should put the money into the assets with very low valuation when you have a liquidity expansion globally.
So China was saying that China is in terms of relative valuations, actually in a quite favorable position, and also the Fed's policy, and also that have an impact also on China's monetary policies. That probably will be a more easing and more loose and a lot more liquidities in the market. That's going to help investing in China.
Yes. I think Chinese assets being through like this deleveraging of assets, so deflation of assets. So when you have more liquidity, actually you're going to see a bottoming of that and a pickup of inflation. Right?
Yeah, as you mentioned about the leverage, we noticed, of course, is that the Chinese authority has been, implementing a strategy to deleverage the economy since 2017. And given the current economic situation and the stock market and everything, and do you think that they will still deepen that the deleveraging effort, or you think that they will actually relax these years?
Well, I was just in Beijing 2 days ago. Hear a lot about like how those think tanks think about this issue. So I think previously Chinese government think about they should calm down the real estate prices, right? So they're putting a lot of deleveraging effort, now leading to a like deflation, and they hope like those technology sectors and those growth like innovative sectors can help the growth in the future. But a lot of think tanks in China now realize that for those growth sectors to really to growth and for entrepreneurs to put money to work, you actually need a very good overall macro environment, a low interest rate, so like entrepreneurs can put their money into risk. So I think those think tanks now talking to the Chinese government, and hopefully Chinese government can realize that and actually do more work to help the macro economy, right? To help on the real estate sector and also local government financing issue.
Okay, so if the Chinese government decided to maybe to a little bit tune down the deleveraging effort this year, and then allow more liquidity into the economy, but would that be sufficient? Because as we also noticed that China's productivity has been declining since the mid-2000s, and from as high as 7, the contribution to the GDP growth from as high as 4% to, I think the latest estimate is about 2.5%. And some of the think tank and economists actually saying that over the next 10 to 15 years, it's going to slow down even further to about 1.2, 1.3% kind of level. But would that be a concern for you for the outlook for the Chinese economy this year and maybe next 1 or 2 years?
Well, I think a lot of global economists has put various projection on the productivity and also GDP growth. Well, as a fact, Chinese economy is large in size, right? It's the second largest economy globally, right? Think about last year, actually China contributed 1/3 of global GDP growth. That's a huge number. That's a huge number contribution to the growth. So at this stage, naturally you will have a slowdown in the GDP growth, but I don't think it will come down to that low. At the current level, China's GDP per capita is still like 12,000.
I'm referring to the productivity, the contribution from productivity growth to the GDP only.
Yes. So with such low like GDP per capita, I think there's still a lot of room for productivity, right? So think about the generation gap in China, right? So the older generation in China, they used to coming from the farming to industrial, right? So most of them don't have much education. But the younger generation, they have a lot of good resources for education. And the Chinese or just the whole Asian culture is putting resources to the next generation, a lot of education level. So I don't think the productivity will decrease that much. As the younger generation, they become more like highly educated and like more entrepreneur than the previous generation. One observation is on some like tech companies, right? So looking at some recent like new tech companies, for them, ByteDance, the CEO is like very talented, right? Like very young, but they speak great English, like global like operation. So you do see a lot of like younger entrepreneurs are entering Chinese markets, seeing like more productivity compared to some old entrepreneurs. So I don't think I think like going forward, the younger generation in China will actually change the landscape and whole like the culture of business community in China, and a lot of companies can actually go global and do business globally.
Yeah, I mean, since you mentioned global, yes, we also have seeing some trend of the Chinese company now actually can actually building, is using their own brand to sell overseas, and also they actually localize some of the brands in overseas, making very good success. Like Pinduoduo has made a very good success in China, in the US, in the Temu, and just like an example. So I think you have a very good point on that one. And so do you think that trend will continue to benefit much to the Chinese stock market as well?
Yeah, I think of course. I think two sides. On the manufacturing side, right? China is facing deflation, so there's a lot of supply and low demand locally. So naturally, you will have a lot of export and globalization for those manufacturing side. So that's one part of globalization. And secondly, there's actually a lot of business model that's working very well in China, coming from China, and they're adopting those new business model to the global markets. Like you mentioned, Temu and also Shein and a lot of like TikTok. I think a lot of companies are adopting Chinese business model to global clients, and that being very successful. So for those two trends, I think both can create a lot of business and investment opportunity for global investors.
Okay, yeah. But going back to the domestic economy, and recently I've been seeing news that, for example, like Tencent, it's Pony Ma telling his staff saying that Tencent is going to have to reduce some of the market share in the payment market so that not to become a rival to banks. So it seems some of those e-commerce and companies or internet companies, they tend to a little bit confined to the market they have, and they are a little bit worried not to go into new market or expand to new markets so that they won't be blamed as being too big as a disorderly expansion of capital or being such a monopoly that actually raise concern from the government again. What's your take on that one?
So I think first, global investors have been very worried about the regulation on internet companies over the last few years, right? So I think starting from last year, there's a big change from the attitude of Chinese government. As you can see, like I think recently Chinese government put some like regulation on the gaming sector, and later they came out and said we're going to remove that regulation. So there's a disconnection between the central government key decision maker and actually those like department of making certain policies, because like central government, they actually want to promote economic growth and help those internet companies to continue their business, right? So they don't want to disrupt those business anymore. So some like local departments, they come out with some like disruptive policies. The central government just called them out and let them remove it. So those attitude change actually calm down a little bit global investor on the regulation front. I think secondly, just like when you have a challenging macro growth, right, in China, a lot of business, they choose not to accelerating their growth in expansion, investing in new business. So growth is actually slowing down in China. So they need to find a new growth areas like globally. Secondly, they're actually improving a lot their profitability, right? So you can see for internet company, they have been increasing their margin along the years and now become very good earnings, right? So I was always talking about like Alibaba's great example. Like Alibaba's earnings has turned 7 times, right, since 2015, but its valuation is the same. So that's like when you have a company turn their earnings like 7 times, how can you just value the company at the same level? So definitely we have seen some like very unrational like valuation for Chinese equities.
Okay, talking about investing opportunities, and so you mentioned about internet company, you mentioned about some of those consumer product company, they can expand overseas. And maybe you can give us some more of your ideas about how investors can benefit from some kind of thematic strategies, or what industry or what sectors should they be focusing on this year?
Yeah, I think for global investors, right? So when you have a high valuation in the like developed market or like other emerging market, for China it's a low valuation. So we do think it's a very good time to buy the good assets, right? Buy the core assets of Chinese equities. So we think internet is still like a core asset for Chinese equities. So internet company, they're integrated with all this business segment of China. So it's like the core. And also we think the large cap equities, especially some like China onshore Asia companies, those large cap actually like are industry leaders in a lot of industry domestically. So those like top 50 names, we manage a fund called KBA. That's like core China Asians. And we manage a China Internet ETF called KWEB. KWEB is the internet exposure. So those like we think that's like core assets and good assets when you have a low valuation.
So investors can look at some of the companies in those industries and also can look at some of the ETF and maybe actually is to wrap up, and maybe you can tell us a little bit more about what you are doing at KraneShares.
Yeah, sure, of course. So I'm a senior investment strategist at KraneShares. So KraneShares is kind of like a China-focused asset management based in New York, but providing solutions to global investors. So my work is actually to identify investment opportunities, especially in China and globally, and to provide the best solutions for our global investors. Yeah, so I'm based in New York, but I travel a lot to China and also Asia, right, to meet with investors, companies, and come up with the best research we can.
So today we are very glad to have Derek to join us in this episode to share his valuable insights in the Chinese economy and investing in China. Thank you, Derek, again. And thank you, everyone, for watching. And once again, if you think that the episode is insightful, and please rate and like, and also share that link to your connection. And thank you very much again. See you next time.
Thank you.